Brexit could trigger major tax hikes for millions of Brits, global experts have warned in a damning first assessment since the EU referendum. The US-based International Monetary Fund, IMF, cut UK growth forecasts from 1.7% to 1.6% this year and froze them at 1.5% in 2018, despite record employment and a global recovery. IMF chief Christine Lagarde warned the drastic fall in the pound since June 2016 has pushed up inflation and squeezed people's incomes, and Brexit could reshape the British economy. But she was forced to deny being too gloomy before the Brexit vote, when she warned leaving the EU could trigger a stock market and housing crash. The IMF now warns the Tory government may have to raise taxes as it faces twin pressures of an aging population and more costly trade after Brexit. Ms. Lagarde said after 7 years of austerity, there is not that much space for additional spending cuts and revenue measures must be looked at instead. She suggested cutting preferential VAT rates for certain goods and hiking tax on the self-employed, a project Chancellor Philip Hammond was forced to abandon earlier this year. The report also suggests rebalancing property tax towards values not transactions and reducing the tax code's bias towards debt. But the IMF also warned there could be more austerity, suggesting ministers remove the pensions triple lock. Ms. Lagarde added, the UK may in future face difficult decisions about the size of its public sector, and the mode of delivery and financing of public services. The IMF chief was joined by Chancellor Philip Hammond as she unveiled today's report, her delayed first Article 4 assessment since May 2016. Britain's growth has plummeted since 2.3% in 2015, and the IMF's gloomy UK forecasts are now well below those for the global economy, at 3.6% this year and 3.7% next year. It warned the vote to leave the EU weighed on private domestic demand, and Brexit poses significant challenges to industries like cars. She added growth has slowed notably. Debt remains too high, and the vote to leave is already having an impact because companies are delaying key decisions. Forecasts could improve, but the more uncertainty we have, the more at risk that forecast is, Ms. Lagarde said. Not all challenges were due to Brexit, she added, emphasizing the aging population. But she warned, these challenges in our view are likely to become even more acute if trade barriers further reduce productivity. Even an orderly Brexit could imply significant changes for the financial sector, the report claimed, and heightened uncertainty means business investment has been lower than expected. Ms. Lagarde was forced to defend her previous report, which claimed there could be sharp drops in house prices and even a sudden stop of investment into key sectors. She said, "We feared that if Brexit was decided upon, it would most likely entail a depreciation of sterling, an increase of inflation, a squeezing of wages and disposable income, and a slowdown and probably reduction of investment." I know some people at the time said, "Oh, it's those experts. We do what we can and everybody has to do their job." What we are seeing today is that narrative that we identified as a potential risk in May 2016 is actually being rolled out as we speak. It's not experts talking, it's the economy demonstrating that. Asked if the IMF had been too gloomy, she said, "Generally in the last 18 months we have been a little bit too gloomy because we had to revise up many of our forecasts. I don't think we are particularly gloomy about the UK economy. Regrettably, the numbers we are seeing the economy delivered today are actually proving the point we made a year and a half ago when people said you are too gloomy and you are one of those experts. Unfortunately, we're not too gloomy. We were pretty much on the mark. Our forecast actually turned out to be the reality of the economy." It came as the Bank of England was expected to announce European banks will be allowed to operate as normal in the UK after Brexit. It will apply to providers of wholesale finance, services to institutions and large firms worth hundreds of billions of pounds, despite the EU's Michel Barnier warning it would not be business as usual for British firms on the continent. Tory Minister Matt Hancock claimed the EU policy was just noise, adding, "The European position is their opening negotiating position. I'm confident we can get a good deal."